Hello, today I'm just going to do a quick review of yesterday's price action and a trade I took in the PM session. So coming into the day I was a bit neutral. We had sell side under all of these lows here. We had buy side above pre-market highs from 7 AM here, trading back down into this range. So ideally if we were bullish, I wanted to see us stay above this fair value gap, this hourly fair value gap. If we're bullish, we should not be closing within the range of it, between the high and between the low, the closing price of this candle in this case, because there's a volume imbalance, you have to include it. So you can see what happens. The 9 AM candle trades down into it, the 10 AM candle opens outside and trades down into it, failing to get to consequent encroachment. Then we start expanding towards buy side. If you also look at this wick here, you can see how we're failing to get under 50% of it. That is bullish. So onto a lower time frame. This is basically everything I was looking at coming into the day. So we had this 50-minute fair value gap. We had this old high here, which is a balanced price range, where we had sell side delivery and buy side delivery back through it. So we returned back into the higher end of it. If we could get through this range, then I would target the new day opening gap and this sell side under this low. But the failure to close under that, and then you can see consequent encroachment of that, you can see how we're failing to get really under the lower portion of that fair value gap. Then what we do after 9:30, we come higher. 9:30 candle, 50-minute candle closes here. What is this? A change in state of delivery. So at that point I mentioned every single opposing candle from this point should support price higher. So opposing candles supporting price higher. We don't close outside the range of this down close candle. And then in here for the last stage of delivery until buy side. This here is where I participated to a long to all-time highs. In here I couldn't really get a good gauge for a funded account play. I did do a couple of paper trades on lower time frames. However, I wasn't too confident in much here because it was very overlapping. It was high resistance compared to this run, which I was expecting to occur in a more low resistance fashion. So what we do on a 5-minute chart, we expand from this low at 9:30 into the range. ES has took this high at this point. So we have buy side above there, which is also all-time highs. So at that point, we fall just short of all-time highs here, have a failure swing to get to all-time highs. Then we retrace down into sell side within the lunch macro. So as ICT teachers, the lunch macro will run against any profitable traders from the AM session. Where did the AM session expand towards? Buy side. So we take out a short-term low, return into this fair value gap. At this point, these gaps down here, this fair value gap here, and this fair value gap here should remain breakaway gaps. Why? Because this range here, between these candles, we had originally buy side delivery through that range here. We then had sell side delivery through that range. And then we had buy side delivery back through that range. So at that point, the only imbalanced price range is here, right? When this high is formed. So we trade down into the previously balanced price range, which is this high. So if I draw that across, you can see how we return exactly into that and then expand higher. So we're trading into inefficiencies into sell side with a higher target. So then I look for longs. So in here, we create two 5-minute fair value gaps. We get the 5-minute change in state of delivery here, which is also, we get a 15-minute early change in state of delivery here. So we close above the opening price of this down close candle. That is a bullish order block when bullish, and I've referenced that as an early change in state of delivery. So going back to the 5-minute, you can see how we close above in a series of candles. We have an immediate rebalance here, meaning that the market is strong, and there's no reason to return back down into these inefficiencies. So these inefficiencies here should be left as breakaway gaps, as this is your classic V shape, your balanced price range, right? So the first entry I took was going long in here. Stop within those breakaway gaps, targeting time highs. That's the original trade I took. And then this is the execution when I was in it. So I was going long within there, targeting all-time highs to stop within the breakaway gap. However, once we traded to this high here, so a measure of buy side we failed to displace and we retraced into the range a little, I basically cut the trade. As soon as we saw failure to displace, I was going to cut the trade when we were trading back and failing to displace over that down close candle which we create. So we create this down close candle here. On this candle here, when we fail to close above it, I am cutting my trade because we're not getting the displacement I was looking for in a low resistance run. And then as mentioned, I have one more bullet. So I have one more opportunity which I'll be able to catch this long. So then I go down onto a lower time frame in here. to try and get a confirmation that we're going to displace out of this range. So this is a range here which I would want speed through, because within this range we have no other PD arrays which previously hasn't been traded to. This high here took out this high here into this inefficiency, so I would want speed through that range in a low resistance manner. So when we're trading towards this high, I'm watching what we do. So on a lower time frame here, these are that old high on that 1 minute. You can just go back quickly. What I'm looking for is us to respect discount arrays. So you see this fair value gap down here, we're respecting. You can see this fair value gap here, we're respecting. So even though it's a bit choppy, we're still respecting discount arrays, right? So what I'm looking for is, for example, us to close over this high. This is a fractal balanced price range where we've had sell side delivery into a discount and then buy side delivery back through it. So it creates this range here as a balanced price range. I'll leave a link to an ICT video in the description which explains this quite nicely. In here, we get displacement away from this fair value gap and creating this inefficiency. Let me mark it out with a box. So we create this inefficiency here with a breakaway gap down here. So the difference between these lines here, there's a small little breakaway gap which indicates speed. You can notice these down close candles, we close over them and then use them as support. So at that point, in my opinion, the market is in a buy program. So if bullish, what we're going to do is stay in the upper portion of this fair value gap and expand higher. So that's where I'm going long. And then once we close over this high, that becomes a balanced price range. I don't want to see us come back into it, right? So we clear this high here with a fair value gap. You can see how we respect the fair value gap and then trade higher. And then you're asking, okay, well, we closed under this down close candle. Aren't you bearish? No, because we're in the high time frame. Like, this is the invalidation. This old high beneath here is a balanced price range. So we've expanded outside of that range, so we can still return into that. For example, if you look on, for example, a 1 minute, you can see how we're just returning back into this down close candle and this old high. We're not disrespecting any PD arrays on a 1 minute, and you can see this fair value gap we're respecting. So then you can see us close over, like I mentioned earlier, with change in state of delivery on a early change in state of delivery. We close over this here. At this point, this becomes, so between this rejection block and then the consequent encroachment of this wick, this is ICT's new PD array which he's taught, and it's just a protective PD array. This is the ICT BOLO, and that basically is just a protective PD array, which means if bullish, we're not going to trade into it because we've got 3 PD arrays. We've got the down close candle, we've got the rejection block, and we've got the consequent encroachment of the wick. That is 3 PD arrays, and if they're violated, we're most likely not bullish. So going back onto a lower time frame, we trade into this short-term low, into that old high, into that 1 minute fair value gap, into this down close candle. That is a turtle soup. We then instantly change the state of delivery, where down close candles get closed above, and we start supporting price in a buy model back towards all-time highs. Down close candles closed above, bullish fair value gap, buy side imbalance, sell side inefficiency. We trade higher into this high. What does this range become? Here, a breaker, where we have a low, high, lower low, higher high. So the upper candle there is going to be your breaker range, and you want to find sensitivity within this fair value gap. That's your unicorn model. Then you have down close candles, closed above, should support price. Closed above, should support price. And then we smack into buy side. So this was the trade when I got into it, and then this was the outcome after some partials, right? And then you've got the executions of both trades here, where I basically bottom tick get out here. When I don't feel like there's displacement, I wait for more confirmation. So I get enter, 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 enter. So that's positioning in to the trade, the first one. Stops just in profit by about $10 or something, but near enough break even of the positioned in trade. Then go long in there, partial, 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 all-time high. And then that's the trade idea. And that's all from a idea of a higher time frame, 15-minute chart of what we're delivering, where we get that change in state of delivery out of the high time frame PD array, the hourly imbalance, the 15-minute balance price range over here, and the hourly wick. We then get that change in state of delivery, and then I just wait for the second stage distribution, which is here. And then that's the second stage distribution of a market maker buy model, where you have smart money reversal, distribution, redistribution, and then target your liquidity. So that was an example of a trade I took yesterday PM session. I hope you enjoyed and hope you found it insightful. If you've got any questions, leave it in the comments. Like and subscribe the video if you want to see more content and push this video to the algorithm a little bit. Thank you for watching. Goodbye.